And good afternoon. Welcome into a Thursday, December 17th edition of Market Talk. I'm your host, Jesse Allen. Happy holidays. Merry Christmas to you. Thank you for joining us. MarketTalkAg.com. That is where you can find us, our home on the web, MarketTalkAg.com. Facebook, Twitter, and Instagram. It is all at Market Talk Ag as well. And what a day we saw in the grain sector here today. I want to jump into this right away because we have some good things to talk about, I think, after a busy Thursday session. Our guest today with Total Farm Marketing by Stewart-Peterson, John Heinberg, is joining us. John, man, oh man, I tell you what, I was staring at that board all day long. It kept ticking higher, and man, we got some positive stuff to talk about today.
Yeah, really good day across the board, especially in the soybean market today, getting above that $12 barrier. We kind of kept hunking our head on that here about a month back, and now we finally got through it. Now we'll see where this goes from here. We got a few things in front of us that we'll need to kind of keep an eye on.
Yeah, for sure. Let's start with that soybean mark. I think that's probably the storyline of the day. You know, we jumped above 12, then we kind of dipped below it through the midday hour, and then that final push to the close, we managed to just squeak above $12 today on that front month January contract. The deferred months, they were a little bit more above that, March, May, July. But yeah, you mentioned it, and we've talked about it quite a bit. That $12 mark has kind of just been that glass ceiling that we kind of finally broke through, closed above, and now looking towards tomorrow, another good day. If we can hold above this and run it up even a little bit more, I think we mentioned this before. That could open up a lot of opportunity in the soybean market, John.
Yeah, this whole move for the soybean market, it started earlier in the week when we got the NOPA crush data for November at 181 million bushels. That was a record again for the month, and that realistically for 2020, 10 out of the 11 months on the calendar so far, we've had record crush. And the USDA continues to reflect that in terms of the crush numbers, and realistically, August was the only month that was slightly below the year before. So that side of the equation, the domestic demand continues to stay strong. That got the market kind of moving higher already, as anticipation the USDA may be adding more to the crush demand as we get to that January report comes out in front of us. And then today we get export sales numbers, and we came in around 900,000, just a little bit over that, which was above the market's expectations. So realistically there, we're looking at a window where we don't need to see a lot more beans move. Does the USDA have to add more to the export front? So we'll continue to see that as we move into January. And then that little side note of China stepping in and continuing to buy a little bit of 2021 beans, for next marketing year is also encouraging. That there's just some concerns that, what's going on with South America, where they are in the demand side of the equation, that they're going to stay in this market. Lastly, that would probably give us the push over top that $12 barrier today was, we do have some forecasts that was looking at some rains coming into Argentina this week. They seem to dry out a little bit on some of the later afternoon models. So that was probably the shot that this market needed to get through. Now, with that, we crossed a pretty big technical barrier, saw some stops fire right away when we crossed through that $12 window. So we'll see what happens next few days here. But one thing we do have to keep an eye on, that could be a little bit of a limiting factor. January options expire on Christmas Eve day. And usually options kind of gravitate to that area where there's the most open contracts. And right now there's about 20,000 open January $12 calls. So that could keep a bit of a psychological lid on this market, at least into that window. Or if we do push out, we probably drift back to that next week. So kind of watch that. We kind of got to get that ceiling or mechanism out of there, and that'll happen on the 24th.
And that'll be an interesting point to watch, and that'll probably be one of the next key points that we watch here in the short term. And I know as well, the world vegetable oil market continuing a nice bullish run. Bean oil vaulted to new highs here on Thursday, and that helped drive the market as well. Starting to hear a little bit more about this Argentine grain inspector and oilseed workers strike without government intervention down there. I'm sure that may be even a little factor. And then you mentioned the weather side of the equation. Starting to maybe see a little warmth and dryness return to Argentina and parts of Brazil. So, I mean, I think all those factors wrapped together was, like you mentioned, that shot in the market that we needed here today.
And the other side too, on that weather side of the equation too, we got 90-day forecasts here for us in the winter, and realistically, with the exception of the Ohio River Valley, everything else is looking to stay above normal on temperatures, below normal on precipitation. So when's the market start thinking about next year's planning window and what could be the issues there in terms of dryness? Not that I'm forecasting drought to kick in here in December,
Mhm.
but you got a market that's already concerned regarding where the bushels could be next year, how much demand we have, that they're going to keep some premium in this market overall. And at least at this stage, everything's still pointing higher. Obviously, still got to be cautious with the end of the year and some profit taking. But I'll tell you right now, the way I'm feeling, at least from what I'm seeing from the fundamentals and the news front, if this market does roll back, that's going to be more of a buying opportunity, I think, than anything.
Now, you mentioned a lot of those open contracts with January options at that $12, mark. I mean, now that we've crossed through that barrier here at $12, do you think we're going to see some farmers selling with some of those remaining, soybeans that are in the bin right now? Do you think they got to this point where they're saying, "Hey, okay, we got to $12, we're going to move some stuff," or do you think we're going to see more of the same of holding on to some of those beans, because we're seeing right now it's pretty hard to pry away beans from the farmer at this time.
I kind of feel latter, on that statement in terms of right now, producers have sold a good portion of beans. They've cash flowed the operation. We're getting to the end of the year. We got tax considerations they need to think about in that regard. So, and again, just the optimism. Just listen to how we're talking. We think $12 is just the next ceiling that could become another floor. So there's some beans that are going to get held back here. I think it's going to take a little bit to get them pried out of the market. And you mentioned the product pricing. We got good strength in meal, good strength in that oil, and the crushers are concerned right now that the export market's going to be bidding up for beans at the same time. So you're going to see that domestic bid continue to stay strong well into the summer. And if you go look at basis prices out into the summer, there's a concern that beans won't be there for these crushers in the United States. So that's going to keep some optimism and some strength in this market overall. I think producers right now are probably going to sit on their hands in here. If they're concerned as we get closer to that South American crop, make sure you
Mhm.
keep those puts in play. If you think this market's going higher, but at least you got something to protect against the black swan event, watch that January report. We've had some pretty good numbers lately, but we've seen those curveballs come in. Not that I'm expecting one on this one, but it's a USDA report, and sometimes you just never know. So if we have good strength in that report on the 15th, probably want to make sure you're thinking about some corn puts, thinking about some bean puts, making sure you're starting to think about next year and building some base.
And that's a good point. I think a lot of us are going to be turning our eyes to that report coming up on the 15th for sure from USDA. Let's talk corn, John. Exports there were fairly strong, 1.92 million metric tons. Basis is still kind of remaining sideways, but we did close well above that 20-day resistance of 426 today. And I mean, we're kind of getting into the 430s now on the board here, and I'm liking what I'm seeing in corn. What are you seeing there?
Again, the demand story is going to stay strong in the corn market. Again, great close today. I will admit that too. We got about 430 on the March. Right now we got 440 is probably our next target window. That's that reversal from a few weeks back. That's
Mhm.
still kind of looming in this market. So that's going to be a big area to fight through, that 440 area. But we watched, like you said, export sales numbers today, 1.9 million metric tons. That was above expectations there as well. And then we saw a little bit of business in 21, 22 as well come in today. So, and really, right now, if you look at the export prices, U.S. corn is about 40 to 50 cents a bushel under Brazil, Argentina, and the Ukraine. So we're the only game in town at this window. And we haven't really mentioned it. The U.S. dollar took a big push lower today with this next stimulus package coming in. That only makes us cheaper and more available. So right now, I'm in a mindset, even though we're not seeing a lot of daily export sales in, we're moving corn. And we proved that last week. We only really knew about 400,000 tons of that was actually coming. And then we get that big number today. So the corn product is moving, and there's a lot of demand out there. You throw the weather card in play from South America, even if the bean crop is on, it gets done, and they still have a solid bean crop, they're behind, and that could put some
Mhm.
pressure in terms of their second crop Brazilian corn. And then obviously Argentina being a competitor on the global scale, if they got dryness, that's going to still aid us. So right now is a good move today. We'll see how things kind of play out. But right now the market's anticipating carry out coming down, maybe in the 1.4, 1.5 window, which would be starting to get pretty tight. And I'm still holding my upside targets above this market.
And I think as well that acreage battle as we get into the first part of 2021, that's going to be a key as well. A lot of factors shaping up here that could move this market one way or another, but I think overall things looking really good. It sounds like in the soybean and in the corn market. On the wheat side of the equation, export sales were solid there today. We finished solidly higher, maybe getting a little spillover support from beans there today. You could share your thoughts on that, John, but this wheat market had a nice strong day as well, it looked like.
Wheat market, we had that crazy week last week with the strong gains, hard sell off on Monday. Now we're just, some correction. Now maybe we're building a bit of a range here, working to the upside. You talk about that acre battle. That's going to be something we really need to keep an eye on, especially in wheat, where, with the dryness in the southern plains, where the hard winter wheat acre is going to be. And then on spring wheat, we saw an individual group come out today and they took 600,000 acres off of the spring wheat in the north, thinking those acres would go to beans. I look at that Minneapolis contract and it's running at a discount the other three wheats. And talking to a producer up in that area, he said, "Yeah, that's going to be a pretty interesting battle." He said, "I'm leaning to beans right now, but they started throwing some money at that spring wheat price. That could change my mind as well." So when we talk about that acre battle, that could be between multiple grains other than just corn and beans here. And plus, you got cotton that's got a strong market going right now. How does that play out in the South? Sorghum, it's got a strong export market and price right now too. So that's going to be in the mix as well. I mean, this market is telling every producer right now we need acres, and it's going to be interesting to see how that shakes out. Biggest thing too with the strength in grains helping wheat, that dollar index break in today. That's going to be a big key. If that pattern continues through this next set of support around the 88 area on the basis point level, then you could really see that wheat market fire up. And again, wheat is an inflation play. We've talked about that in the past. If we got some food issues out there and these countries are looking to secure food supplies, you'll see that wheat market respond.
Well, and you mentioned sorghum there as well, and I know sorghum producers have had a pretty good year this year. There's been some really strong prices, and I like how you set that up, John. I think just with every commodity out there in the U.S., that acreage battle really going to shape up here this spring, and it's going to be, quote unquote, maybe a heavyweight fight just to see what happens.
Agreed. And that's going to carry us into the spring months. And, you look at those corn sales, look at those bean sales, the shipments are moving, that's going to keep those markets moving. Now we got some optimism. We haven't really talked about the outside markets and the vaccine and things of that nature coming into
Mhm.
play. Does that bring the ethanol demand back in down towards the end of the year or mid-year? So there's a lot of things pointing north right now in terms of the commodity markets. Now, obviously, got to still be smart. You got to stay disciplined to cash targets. You got to set some good values. I'm talking a lot of optimism here, and there's still a lot of boxes that need to get checked. But at least at this stage, maybe we're checking them in pencil and not pen. But it's enough that we need to stay focused. That this upside's got some potential, but we make sure you stay disciplined and make sure you start getting some things covered in here too when you got really good value.
Definitely. John, let's switch over to livestock here quick. On the cattle side, we were kind of at a standoff of the southern regions of feedlot country here until about midday today and, into the afternoon here, finally seeing some sales around that 108, 109 mark, a little bit off that asking price of 110, but, doesn't really, it's not something we didn't, wasn't unexpected. We figured we would probably land some sales around that 108, 109 mark here this week and finally getting some movement there. But it just seems like, feedlot country's been a struggle lately. I know box beef cutouts were up nicely at midday. What are your thoughts on this cattle market for Thursday?
Well, cattle markets had a really good week. Now, biggest thing I think on the radar, after that cash trade, we were hearing whispers and saw a little bit of 105 trade, and again, we don't know what those cattle are. They could have been some heavyweights sitting in the lot, and he just needed to move them finally and
Mhm.
took what he got, but that got reported, and that was kind of negative on that front month. But yeah, seeing 108, 109 kind of develop a little bit today, steady with last week, which was encouraging. Maybe we got a little bit of base building in that retail market. A lot of support around the 200 to 210 choice carcass level. So kind of hoping we can dig our heels in here. But we got cattle on feed tomorrow, and this market is anticipating the cattle supply to get tightened up. Total on feed, even with last year, placements around 91%, total marketing around 98% of last year. So if we see a weak placement number like we saw last month, that's going to really start putting a picture out there that this cattle market's going to get tighter, especially going into the second half of 2021. And we're seeing that in the price move as June, basically to the end of the year, even into February of 2022, is now pricing new contract highs. So we'll have to see what happens with that report. That's what it feels like we're kind of pushing into right now, is some optimism that the supplies are going to get a lot narrower as we move forward. And this market, in my mind, is undervalued. I mean, you're looking at cash trade for February cattle at 118 window last year,
Mhm.
retail values where they are now last year. And then now we got a cattle and feed number coming out tomorrow that's going to say cattle numbers are basically steady from last year. So maybe we're getting a little bit of money flow. It's been kind of sitting on the sidelines here in the cattle market the last couple of weeks, but we turned after that first notice day in December, and now we've been steadily climbing higher. Expect a choppy trade tomorrow. If we get a real hard push into the report, we'll see what the numbers give us. So just got to be cautious that maybe the numbers are priced in, but at least right now, I think the longer term picture definitely looks better here in the cattle markets.
I would agree with you, and I think we'll all be interested to see those cattle on feed numbers tomorrow. Flip over to hogs, fairly mixed day there. I know pork cutout values were up over a buck today, but this hog side of the equation, that February contract, we kind of caught up to the cash index. We started the week nice and strong, and now we're kind of just seems like we're facing some minor resistance and going back a little range bound here. What are you seeing in hogs, John?
Yeah, hog market today was actually extremely disappointing. I know we were mixed, deferred contracts a little firmer, softer in the front months. Especially after I saw those export sales numbers this morning for hogs, 30,000 plus for this market year, 44,000 plus for next year. That's a huge week of product sales,
Hmm.
and we got no reaction. So that concerns me. The hog market's just been chewing on a large amount of production, 607 million pounds of pork last week, killing 2.6, 2.7 million head a week. That's just a lot of hogs right now. There is talk that the Chinese hog herd is maybe up to 90% back to pre-African swine fever levels. What does that do in the longer term demand? I mean, they need pork now. Their lunar holidays coming up here in February. This is when they're starting to lock those supplies in for that market or that window. But after we get through that area, then what happens? So I'm a little concerned the way the hog market's been acting, even though we've had a nice pop early in the week. We just hit overhead resistance, $70 on April, $81, $82 on the summer months, and we just can't seem to get through. So we'll have to watch it. If the cattle market starts kicking in, do we get a buy cattle, sell hogs mentality? Too, that could weigh on the market overall. So I'm just a little cautious just because of the pure numbers that we have here. And if that demand starts slipping into the summer months, pretty cautious about what those prices could be. $80, $81 might look like a pretty good value, at least at this stage.
Yeah. John, any other final thoughts you have for us today?
Well, staying in that livestock sector, we didn't ever touch on those feeder markets, and
Hmm.
that one's been really interesting. Talking to people in the countryside, there is a demand for feeders right now, and the market's starting to reflect that a little bit. In fact, August feeders broke the 150 barrier today. So that's one of the areas I've been talking with a lot of my cattle guys about is, locking in those supplies and how do we work that. And but again, that might be just reflective of what this cattle on feed report is going to give us tomorrow is, tighter supplies of feeders available. One little number I saw that was pretty interesting, imports from Mexico, because of the weakening dollar, those numbers of feeder cattle coming across the border have really dropped, because the buying power is
Hmm.
not there. So again, that adds to that picture. And I'm sounding very friendly to the long-term cattle market, but at this stage, if the demand stays where it is and continues to improve, that could be an interesting summer setup for the cattle guys.
Very well could be. John, if producers want to reach out to you to get a little advice on their marketing, how can they do that?
Sure, love to chat with them anytime, Jesse. Feel free to give me a call. 800-334-9779 is the number at the office. Or shoot me an email at johnh@totalfarmmarketing.com.
And you can find them at totalfarmmarketing.com as well. John, unrelated to the commodities, you into Bitcoin at all? I noticed a lot of news about Bitcoin today.
Well, that's a dollar play, and no, I'm not. But I have been looking lately of how can we invest in that somehow, and get some money moving in there. I don't know if you want to jump in at 21,000, but the same thing. It's like jumping in and buying beans when we're at 15 to be doing things. But again, that's a currency play, and there's a lot of indecision where money needs to go, and the younger generation likes using that virtual currency, and that's a direct result of a weakening dollar and money moving in there as a protection against inflation. So that's all tied. And as we just saw, Powell was out. Fed Chair Powell was talking again yesterday. There is no intentions of them moving interest rates and keeping the money flowing, or not keeping this money flowing into these markets. And that's still friendly for ag commodities as well as commodities in general as an inflation play going forward.
Yeah, I brought that up. I was talking with my good friend today, and he was saying how he's doubled his Bitcoin investment here from the beginning of the year till now. So I thought it was an interesting way to wrap us up today. A lot we talked about. John Heinberg with Total Farm Marketing by Stewart-Peterson. Appreciate the time as always here on Market Talk. Thanks so much.
Thanks, Jesse. Have a great week, and have yourself a great holiday season.
Definitely. John Heinberg, our guest today here on Market Talk for Thursday, December 17th. Find us online, markettalkag.com. I'm your host, Jesse Allen. Have a great afternoon.